$3.7 billion. That was the value of tokenized real-world assets held on the Solana network in July 2026. This isn't just some wild projection or a distant goal anymore. This is actual capital that's already made the leap on-chain, and it's fundamentally changing how assets are stored and traded. To understand how we reached this massive scale in literally just 1 month, we're going to break July down into 5 quick themes. Solana takes the crown, Wall Street moves on-chain, equities that never sleep, beyond stocks and bonds, and finally, the global financial future.
Starting off with Section 1, Solana takes the crown, RW ecosystem growth. Let's look at the sheer scale of adoption here.
By late July, Solana hit an absolute industry-leading milestone: 2,582 tokenized real-world assets. That was the highest number across all blockchains at the time. It's a crystal clear signal that builders and institutions are overwhelmingly choosing this network to build their financial plumbing. But here's what's truly fascinating about this. That massive $3.7 billion value, it was distributed across a record-breaking 313,000 holders. So we aren't just looking at quiet, isolated institutional experiments anymore. This is wide-scale, rapidly growing adoption where hundreds of thousands of individual wallets are actually holding real-world value on-chain. Which brings us to Section 2. Wall Street moves on-chain, institutions dive in. Things get really interesting when the traditional giants enter the chat. The traditional heavy hitters are moving in, and they're moving in aggressively. You've got the DTCC, which is the ultimate legacy clearinghouse, running live production-level tokenization trades with titans like BlackRock, Goldman Sachs, and J.P. Morgan. Over in Europe, Amundi, their largest asset manager, is backing Spyco's regulated UCITS fund framework right on Solana. Meanwhile, SBI Holdings is building Japan's first on-chain financial market. These are highly coordinated moves by the world's biggest players. And legacy firms aren't just casually testing the waters. Take Securitize, for example. They literally launched their tokenized SEZ shares on Solana on the exact same day they debuted on the New York Stock Exchange. I mean, a newly public company tokenizing its own shares from day one, that is a massive validator for this tech. Let's move to Section 3, equities that never sleep, 24/7 global trading. This institutional setup is totally changing how we trade globally. Think about traditional legacy markets. You are locked into this rigid Monday to Friday, 9:30 a.m. to 4 p.m. schedule, entirely fenced in by regional limits. Compare that to the new borderless model. Backpack launched the first 24/7 global brokerage, giving international investors round-the-clock access to real U.S. equities like SpaceX and Micron, all backed one-to-one on-chain. It is a complete paradigm shift. And the volume hitting this new paradigm is just staggering. After their $26.5 billion NASDAQ listing, SK Hynix brought their tokenized stock directly to Solana. We're seeing tokenized equity lending hit an all-time high of nearly $52 million through platforms like Camino and Jupiter. Basically, people want to use their stocks as collateral in decentralized finance. And get this, Sunrise's SBCX token passed $1 billion in cumulative trading volume alone. The global appetite here is immense. Now, this slide reveals a wild market share paradox. Backpack held only 5% of the tokenized stock supply, right? While xStocks dominated with a massive 87%. But despite that huge gap, Backpack actually surpassed xStocks in monthly trading volume for the very first time in July. It just brilliantly shows that in these new markets, having 24/7 liquidity and a frictionless user experience will completely outmaneuver just sheer asset hoarding. All right, Section 4, beyond stocks and bonds, alt assets accelerate because this tech handles way more than just corporate equities. Just look at this relentless week-by-week timeline from July. We saw a massive expansion into totally new alternative asset classes. July 13th brought Jupiter Gacha Collectibles. By the 23rd, the sovereign wealth fund Mubadala brought private markets on-chain. On the 30th, Hastra unlocked auto credit integration, and the month closed out with Fidgetal's launching a dedicated mobile app. The speed of execution here is absolutely breathtaking. So what was the actual impact of those launches? Well, early activity for Jupiter's tokenized Pokemon cards generated $3.29 million in just 22 hours. Camino launched an isolated lending market so users could supply PAXG, digital gold, as collateral. And Hastra brought exposure to a $1.68 trillion auto credit market right into decentralized finance.
Whether you're trading authenticated collectibles, borrowing against digital gold, or tapping into auto loan yields, the blockchain is rapidly becoming the operating system for literally anything of value.
Finally, Section 5, the global financial future, building the plumbing. Let's zoom out and look at the macro vision. The big takeaway here is that tokenization has officially moved from crypto-native experimentation into permanent global market infrastructure. What we saw in July 2026 wasn't some fleeting crypto trend. It was the active, deliberate construction of a new, borderless financial plumbing system built for the entire world. Lily Liu, the Solana Foundation president, totally hit the nail on the head here. She noted that the network's long-term focus is financial infrastructure accessible across the internet as global demand for 24/7 market access increases. The ultimate goal is simply making financial infrastructure universally accessible, exactly like information is on the internet today. And Solana co-founder Anatoly Yakovenko echoes that exact sentiment. He points out that blockchain infrastructure represents another attempt to connect global liquidity with major financial markets. It's all about seamlessly linking these massive global pools of capital with markets that have, until now, been totally gated by regional or time-based restrictions. So that wraps up this explainer, but I want to leave you with a huge question to think about regarding your own assets. As 24/7 global markets become the new standard, what's going to happen to the limits of traditional finance? As tokenization makes everything tradable globally and instantly, how long until those old traditional financial limitations simply cease to exist?